The Monetary Policy Committee of the Central Bank of the Gambia convened on Tuesday for its final quarterly review of domestic and global economic conditions in 2024. The meeting took place at the Central Bank's headquarters in Banjul. The objective of the quarterly meeting was to evaluate key economic developments both within the Gambia and internationally, determine the policy interest rate, and highlight the key economic indicators that influence the MPC's decisions. Following the deliberations, the MPC announced its decision to keep the monetary policy rate unchanged at 17%, while increasing the standing deposit facility rate by 1 percentage point to 4.0%. At a press briefing after the meeting, the governor of the Central Bank of the Gambia, Mr. Buha Seydi, shared insights into the committee's deliberations.
Global economic growth remains robust, supported by resilient consumer spending and a continued decline in inflation. In its October 2024 World Economic Outlook, the International Monetary Fund maintained the growth forecast for 2024 and 2025 at 3.2%. However, growth prospects could be affected by the slowing growth in China, cooling labor markets in advanced economies, rising geopolitical tension, and increasing trade fragmentation. Global inflation is expected to steadily decline, driven by easing supply chain pressures, cooling demand due to tighter monetary policy, and improvements in labor supply in advanced economies. The IMF projects global inflation to fall from 6.7% in 2023 to 5.8% in 2024. Advanced economies are expected to see faster declines, with inflation stabilizing near 2% by 2025.
He noted that preliminary estimates of the balance of payments indicated that the current accounts balance for the first 9 months of 2024 shows a moderate deficit of $59.9 million, 2.8% of GDP, improving from a larger deficit of $129.3 million, 5.9% of GDP during the same period in 2023.
The narrowing of the current account deficit was driven by stable remittance inflows, program grants, and tourist arrivals. However, the goods account balance worsened to a deficit of $741.1 million, or 34% of GDP, compared to $657.3 million, or 30.2% of GDP in the corresponding period of 2023. The domestic foreign exchange market remains stable with improved liquidity conditions. Total activity volumes measured by aggregate purchases and sales of foreign currency stood at $479.4 million in the third quarter of 2024, compared to $563 million reported in the previous quarter. The quarter-on-quarter decline in activity volumes partly reflects the moderated inflows of private remittances from $201.4 million in the second quarter of 2024 to $182.5 million in the third quarter of 2024.
Governor Seydi also highlighted that the central bank maintained a comfortable level of international reserve amounting to $460 million in October 2024, which he stated is sufficient to cover over 4 months of imports of goods and services.
The exchange rate of the dollar remains relatively stable. From June to September 2024, the dollar appreciated against the US dollar by 0.3%, the euro by 3.1%, the British pound sterling by 3.3%, and the CFA franc by 1.2%. This was mainly explained by the excess demand pressures to finance the rising imports. The central bank continues to hold comfortable levels of international reserves amounting to $460 million in October 2024, which is sufficient to finance over 4.6 months of prospective imports of goods and services.
He further informed journalists that the stock of domestic debt increased by 6.1% to $43.8 billion, 25% of GDP in September 2024, up from $41.3 billion, 28.2% of GDP in December 2023.
Short-term government securities with a maturity of 1 year or less accounted for 47.9% of the total domestic debt stock. The weighted average Treasury bill rate increased from 10.4% in June 2024 to 11.8% in October 2024. The interbank currency market continues to function smoothly with robust activity volumes. Total trade activity volumes amounted to $10.2 billion in September 2024, slightly lower than $13.8 billion reported in December 2023. The weighted average interest rate prevailing in the market declined from 9.1% in 2023 to 5.5% in September 2024, following the 3-month Treasury bills rate. The banking sector remains stable with robust performance in the third quarter of 2024. Similarly, total customer deposits, which continue to be the main source of funding for banks, increased by 5.6% quarter-on-quarter to stand at $66.1 billion as of September 2024.
The governor pointed out that inflation has slightly edged up in the last 3 months, reversing the downward trends observed in the previous 6 months. Headline inflation stood at 10.0% in October 2024, unchanged from September but higher than 9.8% in August. He added that forecasts suggest that inflation is expected to return to single digits by the first quarter of 2025, barring any unforeseen change in international commodity prices. The committee's outlook for domestic economic remains positive, with expectation for a stronger medium-term recovery. The MPC believes that ongoing public infrastructure development, the recovery of private construction activities, and a rebound in tourism and inflows of remittances will continue to drive economic growth in the coming years. Reporting for Kerfatu, I am Ramatulai Jao.